Hello, my YouTube friends. Happy Monday. If I remember correctly, today is September 22nd. Hope everybody's doing well. Markets are making new highs, which is awesome to see. Feeling a little bit bubbly, so keep an eye out. But to be fair, I think we have a long stretch of a bubble building and going before it pops. So stick around. Should be a great video. Before I get into today's video, remember, as always, this is not financial advice. I am not a financial planner. Please do your own research and reach out to your financial advisor, your lawyer, your accountant for any financial decisions that you guys make. This video is just for entertainment purposes, and I'm just sharing what's worked for me over the years. So, what am I seeing that the video started with at the beginning of a bubble? Well, it feels like 1997, potentially 1998 to me. With the dot-com bubble, things beginning to brew, people getting excited about the markets before we got to 2000 and had the huge pop of the bubble. Now, remember, a lot of people don't. I'm pretty old. When Greenspan did his speech back in the late 90s, that was almost 3 years before the top of the bubble hit. And that was irrational exuberance. Now, if you had listened to him, you would have watched the markets more than double from the time he said that. And just this excited fever of markets going higher. I mean, day after day. This is when I was trading on the floor, and I was upstairs trading currency futures, but the S&P 500 futures were downstairs before the E-mini was invented. Anyway, I just say that because the E-mini ended up taking over the S&P 500. Whatever. That's just interesting stuff if you're a trader and you watch Forex and you pay attention to that stuff. So the markets would open up, and oftentimes they would open lower. But day after day after day, no matter where they opened, they ended up closing higher. It's what I'm beginning to see now. And I'm beginning to see little parts of it with IPOs and stocks going from like $1 to $8 on nothingness. Like that's the sign of bubbly type of behavior. Now, I half hope and I half don't hope that it is like that and we see a huge rally up. The reason I don't hope for it is it's terrible for the economy. It's terrible for most people because the bigger the rally, the bigger the collapse, the bigger recession that we might have. The reason I have hope for it is I feel like I'm seeing it going on, and out of selfishness, I'm hoping to be able to get a good trade out of it because if that is what happens, it's kind of what I'm preparing for in hopes to be able to take advantage of the market moves and the trade. Now, what I hope for is when there's a complete disconnect of valuations and price points. Back in the dot com, that's exactly what was going on. Now, primarily with IPOs of companies that were not profitable, they weren't making money, they were a great idea that people were going hog wild, super excited, getting into, driving the stocks from pretty much nothing to way high before they came down and crashed and went out of business. I'm wondering if that's what we're going to see with the AI technology, and those are the things that are going to be the new companies that aren't making any money, but they're great ideas and people get overexcited about it. So, those of you who are watching, be very cautious of this stuff. If you trade, don't feel like you can't take advantage of it. But if you're a long term investor, just stick with your plan. Go with what you normally do. Be cautious about the fact that things that are undervalued might stay undervalued and they might even get caught up in a correction in a couple of years. It still doesn't mean that you don't have a good quality company. Keep an eye on earnings, make sure it makes sense, and stick with the things that you know are logical and have good value in them. And if you're trading the tech stocks, be cautious of if they really go parabolic and when it just doesn't make sense and they get overvalued. If you're somebody who's looking to get out and potentially take time to pick it up cheaper. Because keep in mind, when the dot com bubble came around, there are some crazy things. First of all, the NASDAQ fell more than 80%. I don't remember quite what the lows were, but I know it topped out a little over 5,000 and I know it fell below 1,000. I don't remember quite what it got to. And then it took a long time to go back up. It seemed pretty obvious that it had gone too far to the downside, but both directions were a very tough trade because on the way down, it kept looking like new bottoms, but it just kept going and going and going. And it took a while. This wasn't like COVID, it wasn't over a couple of months. This was over a year or two. It lasted some time, and then it took a long time to go back up. Think of Microsoft. I might be off a year or two, but after it made the highs, and Microsoft is a good company that was profitable and doing well, when it finally made its peak and corrected and went down, it took close to 18 years before it made a new high. Now that it has, it's taking off again. So, those are the things to be careful of if you're in these tech companies, even if they're great companies. And it's why I'm waiting to see if the prices get completely discombobulated from where the valuation should be. I think right now it's frothy, which is why we're seeing the analysts and everybody else on CNBC talk about how the market's overpriced. I don't disagree with that. But what I want to see is it get totally ridiculously overpriced to where the analysts finally give up and talk about how markets have just changed, and with the AI revelation that it just is different now. Well, markets are markets, and it's not really different. They do what they do. They go too far in both directions. They go too far to the downside. They go too far to the upside, but they always revert back to the mean. That doesn't mean that they're always perfectly priced and it always works out exactly how you think. People always scratch their heads saying it doesn't make sense. Well, that's just what happens. Supply and demand, overexcitedness. Just learn about valuations, understand exactly where you think things should be worth, and trust yourself on it. I'll use my example of Target, which I think right now is undervalued. Well, if the market continues to drive higher, the reality is nobody cares about Target, and the money's going to continue to get pushed into the crazy things like Hims or Soundhound or potentially Open Door or whatever it is that's just flying high. Today, it looks like all the stuff that does the builds the infrastructure for AI. You know, SMCI is doing well. Oracle seems to be having a good day. I imagine some of the other semiconductors are driving forward, and I think that continues. While a company like Target kind of gets forgotten about because nobody's interested, especially as the market starts to go parabolic and those things really start to go higher quicker. Who wants to put their money in big old boring Target when other things are going up that way? Well, I'll tell you somebody who does. It's still me because I'm comfortable with the earnings and what's going on. It is possible that that continues to happen. And then if I'm right about what I expect, and my timeline is kind of thinking maybe 6 months before the next election, I have a feeling that we're injecting so much money and pumping up the economy that that's what's going to create this. I could be wrong. I'm not really politically savvy. I don't really know a ton about that stuff. I watch it more like a TV show and I find it interesting, but it kind of feels like that's what's going on. And if they just keep pumping liquidity in, that it'll keep driving the market until the next people are in office. And then there could be just this like, well, now what? And it's very hard to just keep pumping and pumping and pumping because that's the inflation, and the inflation is becoming a problem. Either way, what ends up happening is everybody doesn't want to be in the targets of the world. Then, when the market collapses, unfortunately, despite what you might think I'm going to say, Target and everything else gets caught in up as well. You have to be comfortable that what you own is a good company and well valued. If this is what happens, and if the market shoots up and comes down, you will see the good companies that are valued pretty well come down as well. They will not fall as much as the crazy ones, and they won't go out of business like the ones that don't have earnings and are, I don't want to call them pump and dumps because it's not like anybody's out there doing that. It's just the exuberance of the people getting into the market, pushing things that are nutty way too high, but they're not making money. And eventually, math is math. If a company runs out of money and they're not making money, they go out of business because the finances don't make sense and they can't get loans to continue, or they just owe too much. But the good companies that have earnings, they'll work their way through it no matter what the stock price does. You have to recognize that earnings are is important. If their earnings are continuing to go higher, that's even better. And just keep paying attention to that and trust yourself with what you invest in. And see if this even happens. It's much healthier for the economy and the markets if we have a normal correction coming up and maybe the markets pull back 10%, catch themselves, slowly go higher, fall back down. That's much more natural and much better for the economy. Just if you're looking for an opportunity, keep an eye if there is a parabolic rise up. The other thing to be real wary of, because I talk about it all the time, is these YouTubers patting themselves on the back about how much of a genius they are. I'm sorry, in a market that's going straight up, everybody looks like a genius. Like, it's not hard to be right when the markets are going higher. And it's more important to know where the markets are going than individual stocks. I would hope and I assume most everybody's portfolios right now are at all-time highs. I was very excited to see where my account closed on Friday, and I would think you guys are as well. And it's nice to see it going up again today. It's not like I'm making any rotations or doing anything yet because I don't make trades, especially in the set it and forget it account, because things get overvalued. I don't try to make that judgment because they can go a lot further, and I don't want to get out of a company like Amazon or Google or Meta or the like simply because I think it's overvalued today because it could just keep going a lot further than I expect. If I see that exuberance, and what I look for, and I know I've mentioned it in other videos, what I'm really looking for is going on vacation and the person at reception talking about some AI stock that they bought into for really no reason, asking about the markets, and extrapolate that to anything you can think of or people you bump into who are not typically talking about markets and are not typically in the markets. I think those of us in the markets are beginning to get excited, which is why I say that I think it's the beginnings of the bubble. And I also think we're getting nervous and thinking maybe we should take something off of the table because it seems overpriced. That's where I think the money keeps coming in to push the prices higher, to cause the FOMO, to make people want to put their monies in because, these things just always go higher. And April, I guess February, March, and April was the perfect setup for this. The market falling and collapsing, scaring everybody for it to catch itself, reverse, and then go make new highs makes the younger generation more and more comfortable that you just buy the dips and it always goes higher. You know, that's true until it's not true. And even the government can't stop it. Like the markets move where they move. And once you get that mentality of you always buy the dip, that's what causes that day after day after day of highs and continuing forward. Because every time the market's lower, the younger generation just comes in and buys it and pushes it higher, and eventually the money runs out, and when it reverses it can be much bigger than you expect in the other direction. I'll also repeat what I said. That doesn't mean I'm taking money out yet. I don't see this like I see right now as early stages, and I don't know that I'm right. Like things could change in that avenue. It's possible we normalize and just don't keep going. My point is keep an eye for a melt up because that is how it is beginning to feel. The same time, I still see stocks that look undervalued. I don't know that those are what I want to own right now because I want to own the things that are flying with the market. Uh, Depends on if it's a trade or a long term investment or what it is you do for your portfolios. If you simply just add every month, I wouldn't pay attention to any of this. Buy whatever you're comfortable with. But I talked about in another video a little of what concerns me is the VOOs of the world, and not just VOO specifically, but all of the new ETFs that cause the most valuable companies to become the most overvalued ones because of the way that those funds work. The other things that really worry me are the yield max stuff. Like, I think they're such garbage. Now, again, not financial advice. You do you. If they work for you, that's great. But they underperform the underlying security. So if you want to own the company that they trade off of, my God, just buy that company, at least in my opinion. But what worries me about the equivalent of VOO is the way that it's structured is it's a computer algorithm that as the money goes in, automatically disperses it and it's weighted to the weighted averages. So if Amazon and Google and Meta and Tesla are the biggest caps in the S&P 500, for every $1,000 it gets equally put in properly for the market cap of the S&P. So more of it is going to the ones that are already more expensive, pushing them to be even more expensive. If that causes a disconnect as to their PEs versus their earnings and how much they're growing to where it's just asinine, eventually it'll correct itself. I don't think eventually is a year yet. And again, I'll repeat it because I've said it 20 times in this video. If it catches itself naturally and we have a small correction and the market keeps just chugging along, that's great. More what I worry about, as much as it's what I'm looking for a trade, is if we have a huge boom. When that correction comes, it's going to be ugly and we're going to have a recession and it's not going to be fun. I'm not gloom and doom, as you heard. I still think we're at the beginning stages and I don't know that I'm right. But if we have a huge boom in the markets, look out for the downside, because everybody who's only been in the markets a few years and have only seen these up moves and you're super excited about it, those of us who've been doing this for 20 or 30 or 40 years and have seen some cycles, the down cycles are not fun and they're not always what people expect. And they may not be so short lived. Like I said, Microsoft took 18 years and it is a good company. And here's the other interesting thing: the longer a stock takes while it makes a base, typically the further it has to the upside. It's why I've liked things like Cisco, CSCO, not the food company one. And it's also why I like PayPal right now. It's based for over 2 years. I'm guessing if you owned it when it was higher, you're out by now. And the longer it's sat in like the 50s and 60s, once it starts going higher, it typically doesn't really go back there, which is why I say I still see bargains out there. I see good valuation. My only recommendation is be really careful right now and pay attention to what's going on. If we start getting really crazy, make sure to protect yourself. Anyway, as always, if you haven't already, hit that subscribe button, smash that like button, make some comments in the comment section. Do you guys think we're headed into bubble territory? Do you make any changes based on what you see in the markets? Or do you just chug along and do the same things no matter what? Because I think that's probably the best solution. It's why I have my set it and forget it account. Oh, I did put on a couple of trades for my son. The market moved more than I thought. I was not able to do the Tesla put I was hoping to. The stock was so much higher on the open that basically when I went to look at the put, the price had dropped a few bucks, and the math didn't make sense for what type of return I was hoping to get annualized. So I just didn't put it on. Similarly, when I looked at Soundhound for him, it had dropped a good amount, so I didn't sell a call. I did sell one later. He was looking at the 17 and a half, and before doing the video, I sold that call. I sold the 14 put, but we didn't chase it. We didn't do too much. And then we sold two of the open door puts. I don't remember which one they were, but his account's doing great. We collected about $100 in options, which to me, that's the goal. And what I'm trying to show him is each week or once a month to kind of look just on the weekend, decide a few things you can sell, collect the premium, and then we're going to adjust accordingly if and when the position changes. He is still long 200 Soundhound, but that's it. We're now short the two puts in the open door, and we're short one put in the Soundhound and one call, and we will wait out the week and see where it ends up. And hopefully he continues doing just fine. I did not end up selling a put in HIMS or a call. I've just been watching it. And I started rotating out of some of the SoFi. The stock got above 30. I sold a few more shares and started getting a little bit more aggressive on some puts and sold some puts in case the stock corrects to be able to take that trade. So I've really been enjoying the options. And I didn't have an opportunity to be able to sell any of the calls in Conagra because the stock had fallen. And part of it is they don't have earnings this week, but next week they do. And I kind of want to wait to see how earnings come out. Now, it could end up really bad and the stock could go lower. But amazingly, as the stock has drifted lower with all of the calls I've been selling and the puts, I'm actually up money even though the account shows that I'm down, which is what I really like about the ability of how options can really add to the depth of what you're doing with the trades. Instead of just sitting there waiting for the dividend, which is what I like about Conagra, I've been able to pick up 15 cents here, 20 cents there, selling both calls and puts and just kind of dealing with whether I get assigned a couple of shares or if I have a couple of shares taken away. And the money's added up pretty quickly, and the stock doesn't really go anywhere. Verizon, the volatility seemed to drop even further, even though it was a low volatility stock. So I've kind of just watching it at this point. I'm short a couple of calls because I had sold them at the middle of last week. But other than that, I really didn't do anything else. For those of you who are interested in what I've been doing, I do think Target is still a bargain here, but I have a position and I'm not really looking to do much. Anyway, again, if you could do me a favor, hit that subscribe button, smash the like button. I got to run up to the postal place because I'm hoping to have my new phone because this one's having all sorts of problems. Have a great day.